Welcome to Subramani. Many people who have been watching my videos know that I have written this book for doctors, and also I do a lot of lectures for doctors. So it is obvious that some doctors would get referred to me for having a review of their portfolio, and I normally don't do that because that is the work of a registered investment advisor. But occasionally I do have a look at their portfolios to see what they are doing. So recently I met a 42-year-old doctor and his 38-year-old wife. She's also a doctor, and they wanted to invest some money, not big money by doctor standards. About 50 lakhs is what they wanted to invest. And to me it looked I was a little surprised, because normally when a doctor approaches me for the first time, or he approaches anybody for the first time, he's about 37, 38 at least, because they start earning late and all that. I've done separate videos and blogs on why doctors start investing late. And when he came to me, I thought the amount that he was talking about, was very big. And I thought the amount that he was talking about was very small. And then we got into talking, and I said, I'm surprised about two things. I'm surprised about the amount. I thought you'll have a bigger amount, and I thought you would have come to me earlier. Why this delay of 4 or 5 years? So he said, you're right. 4 or 5 years back, I had about crore to invest. Then I bought some real estate. And so this couple had worked. They had also borrowed some money for their education. They had repaid that. They had bought a house. They had more or less repaid the house loan. Maybe about a small portion, maybe 30% of the loan was still left, but they were able to repay at a fast clip. They had bought a place where they were practicing, and that also they had repaid parts of it. And they had not saved even 1 rupee for retirement, because retirement was not a priority. I mean, they had 2 children. Those children are in school. The elder one is in higher class, but both are still in school. Why am I here telling you this story? Simply because when he started investing 4 or 5 years ago, when he started having a surplus, he did everything which one should not do as an investor, and I took his permission while talking about him in this video, even though I'm not naming him. He actually didn't know where to start, and he was very confused. So he started watching the media. I don't have to tell you what media he was watching. And can you believe, about his whole amount of 1 crore was invested in equity, right? So maybe 25, 30, 40 shares that he had bought. Some had done well, but many of them had done very badly, because obviously a lot of penny stocks which did very badly. And end of it, in about 2 years time, 2.5 years time, he had nothing to show. He had that about 1 crore, but he completely wiped out in some shares and did well in some shares. And over 2.5 years, he was left with maybe 70-80 lakhs. So he had lost about 20 lakhs, and he realized that's not the way to do it. But he had tried everything. He had tried momentum investing. He had done large cap investing. He had done F&O. Somebody said you should trade in volatility. So he had traded in volatility. He did everything. He paid a lot of brokerage. He had put some money in PMS, which got badly clobbered. It was a small cap PMS. There he got clobbered. He got clobbered in direct equity. He had not put much money in mutual funds. In some mutual funds he got protected, in other mutual funds he had got nothing. He had not got any return. So this was a mess in which he was, and he now felt that he should be far better organized than what he was doing. Luckily, he met a friend who knew about me, and he got referred, and really he had done everything which was wrong. So I gave him some very simple advice. I said, look, I'm not going to give you any rock star advice about what you should be doing. You know that mutual funds exist. If you are not willing to put any effort in learning how mutual funds work, or how equity markets work, or how futures and option works, or how bitcoins work, then the best product for you is to put 70% or 60% of your money in equities. Why only 60% in equities and not more? Because he's young. Because please understand, when a person is doing his own business, his own life itself is equity, right? So he needs some protection. If something like a coronavirus were to hit and his income were to be going to zero, his wife's income incidentally went to zero during COVID times. So now she's also picked up, he's also picked up, and their cash flow has improved far better in November than what it was in September, and September was better than what it was in June, and June was better than what it was in May itself, right? So he had to keep his clinic closed for a long period of time. Nobody was coming, right? So when a doctor goes through all the hassle, the debt funds look very smart and very helpful. Luckily at that time he had bank deposits, which some of it he had to liquidate to pay some of his EMI. Now his cash flow has improved. So if you want to buy and sell equities, please learn how equities work. Don't buy and sell equities without understanding how equities work. See, there is nothing called, you don't buy a share based on a price chart. If you don't understand what business it is in, what it is going to do, you need to understand all that. If you don't understand, there is always a mutual fund. In mutual fund, if you do not understand what kind of funds work, should you be in large cap, mid cap, don't bother. 70-80% of your money you can put a large index fund like the Nifty 50 or the Sensex, right? Doesn't matter. Don't sit and wonder how are the Sensex and the Nifty correlated, right? Don't worry about all that. Put it to one of them and start, and then keep learning. It is very important that just because you know how to pick one stock, it doesn't mean you know everything in personal finance. You need to create a will. You need to organize your money. You need to pay your taxes on time. You need to pay your advance tax based on an estimate, right? Getting everything organized is personal finance, not just saying, I bought Larsen & Toubro and Larsen & Toubro went up, or I bought SBI at 150 and today it is at 250. That is not personal financial planning. Personal finance is hugely personal. So even if you hire an advisor, you have to tell the advisor what you like, what you do not like, what sends your BP up, right? He needs to know all that. If you don't want to do any of that stuff, index fund works. Term insurance works. Term insurance works even if you have an advisor. But index fund will work for you. Why will index fund not work? So 70% in a large cap index fund, 20% in a mid cap, and 10% in a small cap index fund will work perfectly for you, right? Don't worry too much. Also, wealth is not built overnight. So he was a doctor and he thought that he could do some F&O and overnight build his wealth. Wealth gets built with patience. So if this doctor had started doing an SIP of 500 or 1000 rupees when he was 21, and believe me, he comes from a reasonably well-off family, so finding 1000 rupees would not have been impossible for him even 20 years ago. But let us assume even if he had put in 500 rupees, he would have created some fortune. So building wealth takes time. It requires patience as much as you require skill. Like to invest in an index fund, you don't require any skill, whether it's you or your driver or your boss or your business owner or you yourself. Doesn't matter. Everybody with high IQ, low IQ, whether you're a scientist, whether you're a doctor, whether you're a chartered accountant, does not matter at all. You'll all get the same return. So therefore I can have a complete video on why you should not be indexing. But if you're not willing to find time, all of us find time for what we enjoy doing. So if you can't find time, won't find time, whatever, and you have all of us have a limited amount to invest. So this doctor has maybe about 2 lakhs per month to invest. That's not a small amount. You can't afford to take risk on 2 lakhs per month. So go and put money in an index fund. That's the only thing to do, and have patience, because wealth is built by patience. It cannot get built overnight just because you want it, right? It takes time to build wealth. And these are the simplest things which I could have told him. So I asked him to pay off his credit card debt. He didn't understand why you should be paying it off. In the mutual funds which he had invested, he was in the dividend option, which was a disastrous one from a tax point of view. He was in a balance fund getting a monthly dividend. I stopped all that, and then he's on his way. Thank you.